Tesla just reported their Q2 deliveries, and this is the first time we actually saw a decline in deliveries in a very, very long time. In the previous quarter, Tesla delivered 310,000 vehicles. This quarter, they only delivered 254,700 vehicles. In this video, we're going to explain why we're seeing this drop, the important things to know related to Tesla stock, and other important things to keep in mind with the market overall. Now, I want to say this up front. Tesla deliveries dropped a ton, but it's not really their fault, okay? So let me explain why. Like I said, this quarter, Tesla delivered 254,700 vehicles. In the previous quarter this year, so for Q1 of 2022, they delivered 310,000 vehicles. That's a lot higher than what we're seeing in this current quarter. In Q2 of last year, they delivered 201,000 vehicles. So we're still seeing growth in deliveries year over year for Tesla, but in terms of quarter over quarter for this year, we're seeing a giant drop, and there's two main reasons for that. The first reason is just supply chain issues around the world, which is not Tesla's fault. And the second reason is because Tesla couldn't produce vehicles in China like they should have been able to because of the extremely strict lockdown rules that we've been seeing in China over this year. So both of these reasons really impacted Tesla's deliveries, and they will impact their earnings, but it's not really Tesla's fault. It's not their fault, so we can't really blame them for that. And what's also kind of a good thing for Tesla stock is that this gigantic drop in deliveries was priced in. Everyone knew this going into the delivery event. Some estimates were to have Tesla deliveries around 255,000, and then some were as high as 268 to 270,000. Tesla came in basically right at estimates, so there's not really a giant surprise here, but it does suck to see such a big slowdown in deliveries. So this will have implications on, of course, Tesla's earnings, Tesla stock, but also the market overall, considering Tesla is now a member of the S&P 500. So check this out. Tesla stock right now is at $680 per share. Just a couple months ago, it was well over $1,200 a share, especially in the beginning of the year and the end of 2021. And many stocks have just got destroyed over the past year. Now, if we do go into a recession, obviously that hurts most companies out there, but Tesla especially is trading at such a high and aggressive valuation where realistically they can fall a lot more if we do go into recession, and depending on how they manage it, that can just hurt their growth even more. As we've seen from all growth stocks this year, whether it's DraftKings, Palantir, Chewy, Zoom, or really anything else, when the growth slows and when you have aggressive valuations, when the tide turns, it's brutal. Look at Netflix. They were a very quickly, powerfully, or I wouldn't say powerfully, but they were a quick growing, powerful company over the past couple years, right? In the beginning of, or I guess you could say the end of last year, they were trading for around $700 a share, and now they're closer to $170. When the growth slowed down, and when you're trading at a ridiculous valuation to begin with, everything can change very quickly. Here's my concern with Tesla stock. While Tesla is growing at a tremendous pace, while they have awesome technology, I love Tesla as a company, but they are still overvalued, in my opinion at least. And if you guys want a more detailed explanation, check out the first video in the description down below. Basically, it's a video where I go in depth with Tesla's valuation. But anyways, let's just look at it in simple terms. Right now, Tesla has a market cap of $706 billion, okay? If we look at 2021's annual earnings or net income, they had $5.5 billion in net income, right? $5.5 billion in net income, and they're worth $706 billion now. I know that's 2021's data, but it's just for a simple purpose, right? $5.5 billion net income, $706 billion valuation. Now let's look at a company like Meta. $433 billion valuation and $39 billion in net income, okay? Basically what I'm outlining is the gigantic difference in PE ratios between Meta and Tesla. Even if you look at, let's say, we'll look at Apple in a second, but the main thing is Meta right now is trading at a PE ratio of 12.2. Tesla's trading at a PE ratio of 91. No S&P 500 company trades at that level of PE ratio. Now there's two things here. A high PE ratio can be okay as long as you're growing quickly, which Tesla is. But it's like the point is like, all right, even if Tesla doubles their earnings, they're still going to trade at a PE ratio of around 45. So it's like essentially the big problem with Tesla right now is you're paying the futures price today. Okay, you're paying like years and years down the line today. So it's like even if Tesla, doubles, triples, quadruples their earnings, they will still only be fairly valued. That's the problem with Tesla right now. It's like you're paying the futures price today, so it's like it's not worth it for me. But anyways, let's say we look at it in a different format, because sometimes earnings can be skewed. Let's look at Tesla's price to sales ratio. It's very, very hard to skew this data. Price to sales, they're trading at 11.3. That means for every basically $1 in revenue that Tesla brings in, you're paying $11.33 for that. All right. Normally with price to sales ratio, it all depends on the margins that this company has. So basically, if Tesla brings in, if they end up profiting a lot of money for every $1 in revenue they bring in, then you can justify paying a high price to sales ratio. Check this out. Price to sales ratio 11.3. Their gross margins are 25% and 10%, right? Now let's look at Meta, right? Meta, gross margins, 80%. Net margins, 33%. They have 3 times better margins, and their price to sales ratio is only 3.6. So with Meta, you have better margins, gross and net, and you're paying less for them. So it's like, that's just one comparison to Meta. My main point, even comparing them to Meta, is that I just believe there's better stocks out there to take advantage of with this dip we're seeing in the market. That doesn't mean Tesla is going to crash and burn, but I definitely don't think it's worth the risk. A couple months ago, I said it was overvalued, and I had basically a price target of Tesla falling back between like 700 and 750, I believe, and it even fell through that. So depending on how economic conditions continue to get in the market, I can see Tesla falling down to right around 600 to 650, again, depending on how economic conditions are. But there's no doubt that this drop in deliveries will impact Tesla earnings even more. And I do understand that over time, Tesla will become more efficient as a company and their margins will increase. And that will definitely happen in the future. But it's like, I mean, their net margins right now are 10%, and you're paying a price to sales ratio of 11.3. It's ridiculous. And it's just overvalued in a lot of ways depending on how you look at it. So overall, with everything being said, Tesla earnings will be so important this quarter because we have to see how bad their earnings are affected by this drop in deliveries. And then depending on how Tesla reacts, because they are a very influential stock, whether you like them or you don't like them, they will impact other companies. So that will be very important. It'll also have a direct impact on the S&P 500 overall. So with everything being said, Tesla earnings will be very, very important. If we look at Tesla relative to other stocks out there, I believe other stocks are trading at a better valuation. Meta is a prime example. And, some people would argue that, well, Meta and Tesla are not a fair comparison because Tesla is growing a lot quicker than Meta. But, that might be true. But Meta is also in a very high-growing industry, and they're investing a ton of money into the metaverse, which is another growing industry. They're a leader in VR and everything like that. So the main point is that it's important to look at these fundamentals, with any company, especially in times where we are on the brink of a recession. If you guys want to calculate your own price targets for any stock out there and get access to all the data you need for long-term investing, check out that first link in the comments down below. It's an awesome tool. I use it every single day. You can compare 2 stocks against each other. You can look at all the fundamental financial data you can need, calculate your own price targets, and see everything in a clean and easy way. Besides that, have a great weekend. Independence Day is Monday, and the market will be closed for that. So enjoy that. Thank you guys so much for watching, and have a great weekend.